Hello, traders. FX Collector here. Today is Wednesday. It is January 14th, 2026. So, Happy New Year's, everybody. I know it's halfway through January already, but I actually am just getting back to work this Monday. This is the first time in years that I've actually taken, a long period of time off like that. Definitely well deserved and well rested and ready to go for the coming year, which hopefully is going to be a pretty good year. At least in the markets, it's hopefully going to be a pretty good year. Definitely seems like the rest of the world is kind of in a little bit of a sit zone nowadays, but hopefully the markets are going to be volatile. Lots of impulsive trends, lots of nice trendy markets is what I'm hoping for to see this year. So, the whole purpose of these live streams is to take requests from people in the chats on YouTube. So, if you are watching this and you would like me to look at something in particular, definitely put it in the chats. I'll be more than happy to look at anything you want. I see somebody already was requesting silver. I actually just looked at silver for the first time recently. Hi, Skywick. How's it going? Hi, D Reeds. How's it going? Nice to see you guys. Thanks for coming. Yeah, like I said, if you have a specific pair that you want me to look at, definitely let me know in the chats. I'll look at basically anything. I can look at crypto, stocks, a lot of this. Basically, the things on this list right here, the pairs that I keep up with on a day-to-day basis, is everything on this list right here. And this is also the pairs that I do share with my members every single day. I do a members forecast every single morning. I recommend people with direction I think we potentially should be trading in. So, anyways, yeah, I think we're gonna start off with silver because I see two people requesting silver, and I don't follow silver on a day-to-day basis, but I definitely do. I did look at it just recently, just because I've been hearing about all the huge, huge trends that we've been seeing. There's definitely been some crazy trends on some of these metals, huh? Big time. So let's see here. XAD is silver, obviously. And you can tell that I haven't looked at it for a while because, I mean, all my Fibonacci levels are just way overshot. Pretty insane if you ask me. I mean, obviously we are in a wave three. My original forecast on this, and I'll be the first person to admit, I thought this was going to be like a three-way pattern, like an ABC type pattern. I thought we were going to go up to around 54, $55 around this area and potentially turn back down in a much bigger way. But obviously that definitely wasn't correct. And honestly, I mean, I just take it one wave at a time. So I mean, for me personally, I don't really always have to be exactly right about my early wave count because we do know how to tell when a trend is over. And if you can tell when a trend is over, let's say you were looking at this for stopping potentially in this area, like I was, and then it just kept on going and going and going and going. Well, there was no point on any time frame where I would have looked at this on sort of time frames and said, "Oh, it looks like that trend is over." And if I knew that the trend potentially was not over, I would have just kept on looking for longs the whole time. So, I mean, obviously, we are in a wave three, just like we are on gold. This right here is the end of a pullback right here. This is impulsive up wave one. This is corrective down wave two. We are obviously in a wave three right now, as you can see. So, if we're in a wave three, then we definitely want to throw a Fibonacci extension on here because that's going to help us project the wave three. But I'm pretty sure, yeah, we're already beyond the 400% Fibonacci extension, which is as far out as my Fibonacci levels actually go currently. That is a way, way, way overextended trend for sure. I mean, I could definitely add some more levels in here if I really wanted to, but I don't really want to mess up my Fibonacci settings. You could add in the 438%. You could add the 405%, the 461%, the 478%, and that potentially would give you more targets, up here for possible areas of resistance. But I'm not going to do that because it's not very often that you get a wave three that extends beyond 361% of wave one. So we'll just leave it at that for now. I think we can come up with some better Fibonacci levels at sort of time frames. Like I said, I don't cover this pair on a day-to-day basis. I really only look at it when people want me to look at it. But this right here is definitely the end of a wave two. And what I pay attention to is the swing lows in an uptrend or the swing highs in a downtrend. So this is higher low, 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 higher low, higher low. So since the trend ended, the correction ended way down here, this is all one trend right here. This is a wave three trend. And we definitely do not have a breaker structure. We definitely, definitely do not have a significant lower high. So there's really no reason. Um, no, not sorry. Hold on. So there's really no reason to say that the trend is actually over. I mean, it's sure it's fine. It's definitely still making higher highs, higher lows, as you can see. So taking it down to the daily time frame, this is where we want to start adding in some Fibonacci levels because now we can start, trying to project where at least the current wave is going to potentially end. So if we put our Fibonacci extension, well, the last end of a pullback is technically right here. So we have an impulsive up, we have corrective down, and then we have another impulsive up. So if we put Fibonacci extension from here to there, then that should give us areas of resistance to keep an eye out for. Now, we don't really necessarily know exactly which area of resistance is going to stop at, but we pretty much know that this can't be a wave A, this can't be a wave B, and this can't be a wave C. If it's not an A, B, C, then it pretty much has to be a wave 1, a wave 2, and a wave 3 for sure. So if it's a 1, 2, 3, not an ABC, then we do know where the targets for wave 3 are. We know that usually the minimum target for wave 3 is the 161% Fibonacci extension. So if we look at this area right here, we're at the 123 Fibonacci extension right now. The 161% Fibonacci extension is right here at $96. So since I know that this is not an ABC, but it pretty much has to be a 123, I think that the 161.8 is going to be the most likely target for this move to possibly end. So going down to the 4-hour time frame, let's readjust our fib levels just a little bit so we can get a little bit more of an accurate look at this. So the 161% Fibonacci is actually at the $94.35 area. So for me personally, I personally think that this is going to go to roughly that area that I just showed you, which is roughly $94 and probably 43 cents, maybe 50 cents, someplace in that area. I mean, really, even on the 1 hour time frame, we do not have a break of structure. If it does go down and break structure, then we possibly are starting at wave 4. But we do not even have a break of structure yet, so we are definitely still in that wave 3 from the very, very high time frames. If we're still in a wave 3, then that means anything we see to the downside, we definitely need to assume is likely just a pullback within an uptrend. So we really do have to continue to look for longs. I mean, there really is no reason yet. I know that silver and gold seem very, very overextended, and I don't think anybody is going to argue the fact that they are definitely overextended. But overextended to who? I've seen wave threes go to the 261%, and that's all the way up at the $106 an ounce area. So there's definitely really no reason to say that this trend is over. I mean, I don't think it's over. From the last major end of a correction right here on the daily, it definitely looks like a wave 1, wave 2, wave 3, wave 4, and wave 5. So we might be getting close to making a pullback. But even if we do make a pullback, it's probably not going to be over at least until we get up to that 161% fib. So anything we see to the downside, we are definitely still looking at is likely just a pullback within an uptrend for sure. So, I mean, definitely throwing your Fibonacci retracements on anything you see to the downside. This right here potentially could be like a little 5 ways up. Maybe it is going to go down, maybe it is going to break, and then it ends up being like a little contracting triangle, and then later on, not a contracting, but expanding triangle, and then later on it ends up continuing back up. Either way, I mean, really on silver and gold, we really cannot recommend anything but longs in an uptrend. That's pretty much the only thing I would be doing. It's the only thing I would recommend. Definitely. So let's see. Yeah, let's take a look at gold. Like I said, the whole point of these live streams is kind of interact with other people in my YouTube fans. So if you do have any requests, definitely put them in the chats. I did make the PM videos for members only this year, just because I've had so many people tell me that I give away everything for free. When you have about 25 different people say that you give away everything for free, you start to think, well, maybe they're right. So the PM videos that I make every single night, which is the euro dollar, the pound dollar, gold, and the US dollar yen, are now for only the premium members on my website, which you can sign up for my website at www.fxpercollector.com. It is only $30 a month. I do share every single trade I take with the group at the exact time of entry. So I really don't intend for this to be a signal service. A lot of people do use it as a signal service, but I've never intended it to be that. It's just kind of a group of traders that share different trade ideas and share their trades and things like that. It does come with a trading course, which is about 35 videos, and it comes with a ton of educational information. Starting this year, I'm actually taking a small trading account. I'm taking a 1,000 euro trading account for my primary trading account, and I'm running the Kelly criteria or the Kelly criterion formula on that small account. And my purpose is if I can take a 1,000 euro account and then turn it into a 10,000 euro account using this Kelly criterion formula, then why can't I take a 10,000 euro account and then turn it into a 100,000 euro account? You know, there should be no difference. And then if you can do that, then why can't you take 100,000 euro trading account and turn it into a $1 million trading account? So, you know, over the course of this coming up year, the year 2026, my goal is to first turn the 1,000 euro trading account that I'm currently trading with this formula into 10,000 euros. If I can do that, then I'm going to try to turn it into 100,000 euros. And who knows, maybe by the end of the year, we can multiply this possibly into €1 million. And if anybody is a fan of the Market Wizard books, which if you are a trader and you haven't read the Market Wizard books, then you're definitely missing out on a lot of really good information. But if you are a fan of the Market Wizard books, some of the most successful, most rich traders in that book are using either the Kelly criteria formula or they're using a different version of that formula to dramatically multiply their trading account. So, like I said, I do so every single trade I take with the group. I do explain this formula to the group. If anybody wants to follow me along and trade this formula on their trading account with me, they're more than welcome to. And like I said, it is only $30 a month. I keep my membership extremely cheap because I am not looking to get rich off my memberships. I'm looking to get rich off my trading. Like I said, I would like to compound my trading account into $1 million, go from 1,000 to $1 million. That would be pretty exciting for sure. Not dollars, but euros, that is. So anyways, let's switch back to the main pairs. Let's go look at gold because that is the next pair on my list. So we'll do gold next, and we're gonna go in order. Skyrick, hey, Skyrick is gonna ask him for the Aussie dollar. We'll do the Aussie Kiwi. The pound dollar is next. Yeah, I know the dollar pairs are a little bit on the slow side, aren't they? Hey, Joshua, how's it going, buddy? Glad to be back to work. Like I said, from now on, you know, now that I'm back, I took about 3.5 weeks off, but now that I'm back, I'm going to continue to do these live streams every Wednesday at 5 p.m. GMT time. And I also do meetings on Tuesday and on Friday, but those are only for my premium members also. And like I said, you become a premium member on my website by signing up for only $30 a month. It's extremely cheap. $30 a month is very cheap, and if you're paying in euros, that's really only about what 27 euros, 28 euros a month. If you're paying in pounds, that's really only what like 25, 26 pounds per month. So definitely very cheap for sure. Another thing that I've been doing this year is I've been really focused on coming up with some really good analysis on the high time frames. So yeah, I've been really focused on the higher time frames, you know, coming up with some really good analysis. It is obviously very clear that we are still in a wave three on gold. Just like on silver, we are definitely in a wave three. And just like on silver, we're not really even at a Fibonacci level. I mean, we're right in between two Fib levels. If we were sitting at a Fib level, I would say, okay, well, maybe there is a chance this wave three is going to end. But we're not at a Fibonacci level, and the next Fibonacci level is right around $4,800. So definitely still very bullish on gold. Now, when you start to go down on the time frames, you do start to think to yourself, "Oh, maybe gold is ready for a pullback." But honestly, I think that the higher time frames are telling us the correct story. If you go down to the daily time frame, this is where you start to say, "Oh, look, this is a wave one, wave two, wave three, wave four, wave five," and we are sitting at a Fibonacci level on the daily time frame. So gold definitely could make a significant pullback, and if gold really is a wave five, it possibly could even take out the low of wave four. Because when you make a pullback to a five wave trend, you're always going to take out the structure of the wave four, whether it does something like this and then does that, or whether the wave A comes down, takes out structure, and does this. Either way, if it really does end the wave five, it is going to at least take out the low of wave four because that's what happens at the end of a five wave pattern for sure. So, anyways, going down to the 4 hour time frame. On the 4 hour time frame is where you start to see a five-way pattern within the five waves. So potentially we have a five-way pattern for the for the fifth wave on the daily time frame, right? We got definitely what looks like a possible one, possible two, three, four, and five. So if we get the end of a trend for the 5 of 5, then that most likely is going to tell us that the wave 5 on the daily is complete. So it is a pretty important area because if it does break and hold below this structure, then this is the end of a wave 5 on the daily. And if it is the end of a wave 5, because of our LE wave knowledge, we know that it's eventually going to go down and take out the low wave 4. So that gives you a pretty good target area. Like I said, it could go down, make an A, make a B, and then go down, make a C, and then go up. Or it could make a much bigger crutch and go down, take out the 4, and then make a pullback, and then make a C, and then go back up later on. Take it one wave at a time for sure. I mean, on the 1 hour time frame, I definitely am still recommending longs. Obviously, there really wasn't a long today, but there definitely was a long back here. There was a long there. I mean, every single one of these little pullbacks, I would definitely be considering. Every single one of these pullbacks is nothing more than an opportunity to go long again. I think that every single pullback you see, you should not be worried about trying to go short. Every single pullback you see, you should be looking at that as possibly another opportunity to go long, unless it really does go down and give you that significant break of structure to the downside, roughly on the 4 hour time frame, which it obviously has not done so yet. So, we don't really want to assume that something's going to happen. In my opinion, especially with LE wave traders, because I've been studying LE wave for about 16 years, and I've seen a lot of people studying LE wave. In my opinion, people get married to the LE wave analysis, and they're like, okay, this is a wave 5, and they're gonna assume that it needs to go down and take out that low because that's what happens at the end of a wave 5 according to LE wave patterns. The problem is as soon as you start assuming anything about the market, that's when the market's going to slap you in the face and take all your money from you. Because yeah, it looks like a wave 5, but do we know it's a wave 5? Hell no, we don't know that. It could go down, it could reject structure and go back up, it could go down, make a higher low and go back up. There's no reason yet to say this uptrend is over, especially when you're looking at the weekly time frame, and we're actually not even close to a Fibonacci level, as you can see. Let me get rid of this on the weekly. There we go. So definitely still very bullish on gold. I mean, there's really no reason to say that gold is over yet. And if you think that gold is over yet, then you're doing nothing but trying to pick the top of one of the strongest trends I've seen in the 16 years of trading. Well, maybe not. 2009 was pretty strong on the yen pairs when I first started trading because of the housing market crisis. But definitely one of the strongest trends I've ever seen in my 16 years of trading. So if you're on sort of time frames thinking that it's a good idea to go short against one of the strongest trends I've seen in 16 years, then you're probably just asking to get your money taken away from you. Maybe if you're scalping like the 1 minute time frame, then there could be a little bit of a different story. But otherwise, it is longs all the way for me, 100%. Aussie dollar is a little different. I have a couple different possibilities on the Aussie dollar. On the really high time frames, as you can see, I on the high time frames, I try to come up with two possibilities for everything, or at least the pairs that I follow very closely. So on the monthly, we're either in a WXY, and if it is a WXY, I would be targeting this area, which all these charts are said with my members in the members forecast area, which is on Discord. So every single one of these charts with this really good notes and really good potential targets, every single one of these charts is in or is on Discord in the members roadmap area, which I update every single day, and I tell people what direction. These are all the pairs that I update every day. These are all my trades that I take every day. I also do PM videos. Like I said, the PM videos are only for premium members now. So if you do want to watch the PM videos, then you definitely need to be a member of YouTube or a premium member of my website. So anyways, ABC up for a W, or the more simple analysis is that this move up right here is just simply a pullback to this last impulsive down. We're at the 78%, and now it's just going to turn down and keep on going down. Two completely different analysis. But the reason why I really am a big fan of coming up with two different analysis and two different directions is because if I think this is going up for this, then I'm subconsciously going to ignore evidence on sort of time frames that it's not true and that it's actually doing this. But if I come up with two different analysis and two different directions, then I should be able to recognize one or the other. instead of getting married to my analysis and not recognizing it. So we are at the 78% Fibonacci retracement of this whole move down. This whole move up right here could just be a pullback to this move down. It could literally turn at this fib level and start a brand new downtrend. And like I said, this could be an A, this could be a B, this could be a C, and it could keep on going down. How are we going to know that that is true? We are going to know that that is true, which honestly, we're getting pretty close to knowing it already, in my opinion. If we get a break of structure to the downside on the daily, then that means that this trend right here is complete. If this trend is a wave 3 trend, then it will not break structure, but instead it will make a higher low and keep going up. If this trend is actually not a wave 3, but it's a wave C, then it will break structure and then it will probably pull back and then it will probably start a brand new series of lower lows, lower highs on roughly the daily time frame. So we don't really need to guess. If we allow the market will tell you what it's doing, but you have to keep an open mind. You have to keep an open mind, and you have to have multiple possibilities. And you really, really should, potentially have multiple possibilities for all of these. Now, I don't know whether it's going to make a. In my morning analysis, I thought I was saying that it probably is going to go up, which I still think there's a good chance it's going to go up. But if it does decide to break structure down, then we need to recognize that this is probably the top of the market on the daily, and it's probably going to start a brand new downtrend. Going down to the 1 hour time frame, I still am not ruling out the possibility that it's going to go up, though. I mean, all the dollar pairs do look like they want to go up, and the dollar index definitely looks like it wants to go down. So, I mean, we really can't rule out the possibility, like I've been saying in my morning videos, that this is an A, a B, and a C, and this is a 1, this is a 2. It's going to bounce from a fib level. If it goes up and breaks structure on this 1 hour time frame, then the wave 2 is likely over, and we are likely going up for a wave 3. If it doesn't break structure on this 1 hour time frame, but instead does this, it makes a lower high, makes a lower high, lower high, lower high, lower high, lower high, and then eventually breaks that daily time frame structure, then we know that we have made a top on the daily to weekly time frame. And as long as we take it one wave at a time, that's pretty much going to tell us what's going to happen next potentially. So, anyways, yeah. So, like I said, if we take it one wave at a time, we can kind of know what's going to happen from a day-to-day basis. We don't really have to guess more times than not. So, anyways, let's see who is next. It looks like the Aussie Kiwi is the next pair on the list. Like I said, the whole purpose of these live streams is definitely to take requests from people in the chats. Kind of a way to thank you for following me on YouTube. I really do appreciate the support. Definitely like and subscribe. Definitely stop in every Wednesday for these live streams that I do. I'll take requests for at least an hour if people are continuing to request stuff. The Aussie Kiwi, like I said, I only follow these pairs on a day-to-day basis, but I do try to keep up with everything on this list, at least on the high time frames. I just don't do quite as thorough of an analysis on these ones as I do as the other ones. If you go all the way up to the monthly time frame, I still think this whole sideways price action is still a pullback to this move down. I still think at some point the Aussie Kiwi is going to make a probably about a year and a half downtrend, and it could end up making a downtrend roughly the same size as this downtrend right here, which is a huge, huge downtrend. And that downtrend right there lasted, geez, probably, yeah, lasted about 3, 4 years. So, we potentially could at some point start about a 3, 4 year downtrend on the Aussie Kiwi. Now that I'm here, let's do a Fibonacci retracement on there just to see if we are at a fib level or not. Mm, let me see. Hold on. I gotta do the other fib levels. Let's see. I'm gonna go weekly and then come in here and change it. There we go. Oh yeah, we're not even close to a fib level, are we? It's probably gonna keep going up for now. Natural gas. Yeah, no problem, Charles. Yeah, I mean, we're definitely still in an uptrend, and the fact that we're not even close to a Fibonacci level makes me pretty confident that the uptrend is probably not over yet. Oh wow, that really looks clear on this time frame. Look at that. One, two, three waves down. That right there is the end of a pullback. Wave one, wave two, wave three. I'm extremely confident that we're probably in a pullback that is going to eventually go up again. And it might not even be a wave four, wave five. It could just be a subdivision of a much, much, much bigger uptrend for sure. So on these shorter time frames, let's get rid of this Fibonacci because that's pretty much useless on the shorter time frames. Most likely we are gonna make a bigger pullback than we are already making. Let's get rid of these like that. So yeah, this is very clear to me. This is a one. Look at that. That is a beautiful pullback. One down, three up, one down. That is a beautiful ABC right there. And then look at that. That's a beautiful pattern too. One, two, three, four, five waves up. That's amazing looking wave three. So what do we know about Elliott wave? We know that if this is a wave four, then it probably is going to take out the wave four structure of the wave three, which is right here. And it's also probably going to hit a Fibonacci level, which the next Fibonacci level would be right here, the 50%. I would be targeting the 1.156 area for the this move down potentially. So I would on the 1 hour time frame, I would be looking for shorts. I definitely wouldn't be trying to go short now. But if it does start to move to the upside, I would throw my Fibonacci retracement from here to here. I would look for a Fibonacci bounce for more shorts. It very likely is going to take out this low right here, which means it's probably going to push down to that 50% and maybe even a little bit lower than that. So yeah, we are definitely still very bearish. I mean, there's no reason to say that we're not going to be bearish for the at least a little while until we start that wave five or just a subdivision of a much bigger uptrend, whatever it potentially could be. So, anyways, let's see, what do we got next? The pound yen from Samuel. Hey Samuel, how's it going? Hey Andrew. Pound dollar is slow going. I don't know why the pound pairs are so. I feel like the dollar pairs are waiting for something. What do we have for news tomorrow? We don't really have anything too important, do we? I think the thing that is really important right now is potentially what's going on in the geopolitics right now. You know, whether or not the U.S. is going to war, there's going to be a war, whatever the hell's going on. I try not to pay too much attention to that stuff because it's too depressing, in my opinion, and I don't really need to know. I live in a country that didn't participate in World War One or World War Two, and even if there is another war, I don't really think I'm gonna have to worry too much where I live about any issues. So not too worried. The yen pairs finally started a bigger pullback, didn't they? Now on the daily time frame, yes, this is going down, and it's probably not over yet because now it looks like a 1, 2, 3, not an ABC. It's still in an uptrend until we break this area. If we break this area, then we have definitely made some sort of a significant top on the daily and probably the weekly. But until it actually breaks that area, we cannot assume that it's going to break that area, can we? We have to assume that this could be just another pullback within an uptrend. But more than likely, because of what it looks like on the 4 and the 1 hour time frame, it's going to be a bigger pullback. More than likely, this is not an ABC, like I was saying this morning. It possibly could just make another ABC and go up like that. Well, more than likely, that's not an ABC because that's a little overextended to be an ABC. And if you want, I can show you why. Maybe it's not. We'll see. Yeah. Kind of the rule of thumb is that a wave C can't really be more than 161% of wave A. So if this was an A and this was a B and this really was a wave C, then it shouldn't go to the 161%. It should, turn before that. The fact that it went beyond that tells me that that is not an ABC. This is probably a 1, 2, 3. It's probably eventually going to make a wave four, a wave five, and this is either a wave A or a wave one. And luckily, we trade wave A's and wave ones exactly the same. And then what comes after a wave A and a wave one is it cuts into the whole 5 ways down, either wave B or wave two, which we would trade exactly the same, whether it's a wave B or a wave two. What comes after a wave B or two is a wave C or a wave three, which we would trade exactly the same, at least until we get to the part where wave C could potentially end. Then we potentially are going to be looking for the difference between a wave C and a wave three. But for now, there's definitely no reason to say that this is over. So I would be looking. It really depends what time frame you're trading too. I mean, if you're trading like the 1 hour time frame and below, then I would be looking for shorts because obviously we've broken down and obviously this is going to make a much bigger pullback. If you're trading like more of a swing trader, kind of like me, then you might actually be waiting for the long, even if it takes all week for that to happen. I'm pretty sure there's some yen news next week too, isn't there? I'm pretty sure we got some yen news next week at some point. Oh, President Trump talking. Yeah, right here we get the Bank of Japan press conference and monetary policy next week on Friday. They're probably going to increase rates again, probably, which is kind of a big deal for them. So, anyways, yeah, I mean, I think that the yen pairs have finally made Maybe it's a top, maybe it's not a top, but they're definitely starting a bigger pullback, is what I think. The pound dollar, yeah, the pound bears. I don't know. I feel like they're waiting for something. I thought the pound dollar was actually quite a bit different than the euro dollar recently. The euro dollar to me really looks like it's going to go down and it's going to keep going down. I mean, we were thinking that it was going to go up one more time for a C, but I definitely am very bearish the pound dollar, the and the euro dollar. The pound dollar looks a little different to me. The pound dollar looks like a wave one, wave two, wave three. This kind of looks like a little expanding ABC of four, and it kind of looks like it needs to go up and make a wave five, like a double top, then maybe go down for like a big wave two or a big wave B. So the pound dollar is definitely a little bit different. But boy, it doesn't seem like it's following through with that, does it? What's going on with my trades? Yeah, not really a lot. Let's see. Yeah, I doubt that it's over now, but I know the pound pairs just do not want to go up anymore, do they? Maybe they are starting a much bigger move to the downside. The thing with the pound dollar is the pound dollar was the first pair to have the end of a trend on the weekly. And yes, this definitely looks like an ABC right here, but this potentially could do something like this and like this and like this and just keep on going down. Just like what I was saying about the Aussie dollar. This could potentially be a wave C, and it potentially could start a brand new downtrend. And honestly, that's kind of what I hope it is, because if it starts a brand new downtrend, that means the euro dollar and the Aussie dollar are going to go down. The dollar CAD, the dollar Swiss will keep going up, which the dollar Swiss does to me look like it could start a much bigger move to the upside. A lot of the Swiss pairs look like an ending diagonal on the really high time frames, like the monthly to yearly time frames. So, anyways, pound dollar, yeah. I thought that the wave four was going to end, and I thought it was going to go up. I'm not in this trade or nothing, but the fact that it didn't turn out a fib level, maybe I guess was the clue. Maybe it's in a wave C now. I don't know. Maybe this really is a wave, like a wave one, two, three, four, five, and then this is the A, this is a B, and now it's going to go down to the 78% for a C, and then turn back up. I mean, we definitely got to break a structure on the 1 hour time frame, so we know that this wave right here is complete. So obviously it's either a one or an A, and this is either a B or a two, and we're either in a wave three or a wave C. If it really is a wave C, then it will probably go to the 78% and then turn back up. If it's really a wave three, it might just break these lows and confirm that it is going down on the higher time frames. Definitely very possible. We kind of got to take it one step at a time nowadays, I think. Unfortunately, the markets are pretty wild nowadays with all the, like I said, the geopolitics, going on in the world right now. The markets are pretty volatile, pretty overlapping. A lot of uncertainty in the markets, in my opinion. We already did the pound yen, right? Didn't we already look at that? Yeah, we already looked at the pound yen. The stock market. I haven't actually looked at the stock market once this year, just because I don't trade them. Do I have it in this? US pairs, yen pairs. I thought I had the stock market already lined up, but I guess not. Indices. What is it? The US 30, the Dow Jones? The old Dow Jones. Man, it's still making all-time highs, isn't it? Oh man, now Nasdaq doesn't even look like it's over either. It looks like it needs to go up more. Wow, stock market's pretty wild. Before I went on my Christmas vacation, I thought, see right here, I thought this was going to be the end of a fifth wave ending diagonal, because it did go down and break structure, but then it ended up being an expanding ABC. What's also expanding ABCs can be tricky because they do break structure and they make you think that it's going down, but really what it is it's an ABC. It's an expanding ABC, like a expanding triangle. So, I mean, the break of structure on the daily is right here. If it breaks below there, then we definitely need to be bearish on the stock market. If it doesn't break that, then anything we see to the downside is possibly just another pullback within the uptrend. Oh wow, that really actually seems pretty damn clear, to be honest with you. That looks like a wave A. This looks like a wave B. I bet we're already in the wave C. If this goes down, takes out these lows, and then breaks structure back up, it's probably going to go up again. Is there a Fibonacci level we can throw on this higher time frame to see if there's any resistance coming up? It's hard to know exactly where you would want to put your fibs. Probably on the monthly is the best spot, honestly, because that's where you can really define these pullbacks. Let's throw the fib on there and see where we're at. We're at the 100%. 100% is definitely often a very good area of resistance or support. 100%, definitely. So the 100% is definitely an area where this could start another pullback. You know, it could do something like this, or possibly something like this, or something like this. On the monthly, it's not going to be a downtrend unless it breaks that low. So I wouldn't count on any big downtrend starting. On the weekly, it's not going to be a downtrend unless it breaks this low. So, you know, you won't even know that this trend right here is over unless it breaks that low right there. That's a long ways away. On the daily time frame, you can't say that the daily is going down unless it breaks that low, which is still quite a ways away. So if this is just an ABC, it's probably going to go down like that and potentially go back up. And then if it goes down and breaks structure, then yeah, it's the top. But we, like I said, we have to be careful because that was a breaker structure, and it definitely was a solid breaker structure. And then it just ended up being an expanding flat and just kept on going up. So, like I said, definitely make sure you like and subscribe. I do these live streams every Wednesday. It's a really good way to interact with my audience. So definitely do that. If you haven't checked out my website, definitely at least check it out. I mean, it is very cheap. It's only $30 a month. It is a very, very, very cheap membership. You're probably not going to find another membership as cheap as that. And I really try to keep it as cheap as possible because, like I always say, I'm really not looking to get rich from my memberships. I actually made a video for Instagram, so make sure you follow me on Instagram, my business Instagram. I made a video that will probably be out tomorrow, talking about how I got into trading and my old mentor and things like that. So definitely check that out if you, probably tomorrow on my business Instagram account. Anyways, yeah, let's move on. Natural gas. Natural gas is something that I never have traded in my life, but there's a person in my group that always trades it. And CAD USD. Do you mean the USD CAD? You can look at the CAD USD, but that's not a real chart. Holy crap, look at it. Oh my god, it's going down, isn't it? Oh, thanks a lot, Joshua. I have a lot of really big plans this year. I know I took almost 4 weeks off for the holidays, and that's actually the first time in my life, well, since I've been trading, that I took 4 weeks away from the charts. And I definitely lost a lot of members during those 4 weeks, but honestly, I don't really care too much because, like I always say, I want to get rich from my trading, not my memberships. But I got some really big plans for this year, and most of it has to do with this Kelly criteria formula. Like I said, if you can turn $1,000 or 1,000 euros, I always forget that I'm trading in euros now, not dollars, because I'm in Europe. If you can take 1,000 euros and turn it into 10,000 euros, then why can't you take 10,000 euros and turn it into 100,000? You know, if I could turn 1,000 into 10,000 in the course of maybe 2 months, then I should be able to turn 10,000 into 100,000 in 2 months and 100,000 into 10 million. There's really no difference, right? The math is the same whether no matter how big the numbers are. So this Kelly criteria formula is something that I've actually wanted to try for years. I just it kind of scares me a little bit because the risk of ruin is definitely there. Anybody that knows anything about the Kelly criteria formula knows about the risk of ruin because you definitely could lose all your money. There's a 100% chance that you definitely could lose your money, but that's why if you do it, I really highly suggest doing it with money that you are not really too worried about. I did it with €1,000 because I have, you know, that's a tiny percent of my actual trading account. So if I lose that €1,000, it's not going to be the end of the world, that's for sure. But if I could, like I said, if I could turn that €1,000 into 10,000, I should better turn 10,000 into 100,000. So that's going to be pretty good. I think that we ended a correction on the weekly. I think we're going back down. I think there's a good chance this could go all the way back down to like $2, or maybe like $1.60, whatever it is, a gallon or however you measure this. I don't know how they measure it. Probably a gallon, right? Because it's a U.S. thing. Could be liters. I don't know. Who knows? I would throw your Fibonacci extension on this from here to there to there. If this is a wave three, which it definitely looks like it is, then I would actually be targeting the 1.96 area as a possible area where this potentially could end. One of the reasons, like I said, I've never traded this in my life, but I've always told people that I think it's a really good pair to trade. The problem is that the swap fees are really expensive if you're swing trading it. But the reason why I like this pair is because look at that. That's like a perfect three-way pullback. That's like a perfect three-way pullback. And then look at that beautiful trend. That is even a pretty nice little three-way pullback right there. It makes really nice little three-way pullbacks, like literally everywhere. So what would I be doing right now? I would be looking for shorts. I'm going to take a page out of my mentor's book, and I'm going to say the strategy right now is to either already be short from the last pullback up here, waiting for an exit, or the strategy is to be patiently waiting for a brand new three-way pullback to go short again for potentially the continuation of the downtrend. There's definitely no reason to go short now, and there's definitely no reason to go long, in my opinion. Definitely would be looking for shorts. I would, like I said, I would be targeting the 1.96 area roughly as a potential end. Yeah, we got the close of the 2 hour time frame coming up pretty soon. I mostly trade the 2 hour time frame. I'm trying to follow my rules to a T this year because I think if I can keep my trading very mechanical, then that's how I'm going to turn 1,000 euros into 1,000,000 euros is by mechanically trading the 2 hour time frame all the way there. But yeah, at the close of every single 2 hour candle, I have to check my charts. No ifs, ands, or buts about it. US dollar CAD, back to a pair that I actually follow. We just recently had a nice break of structure on the dollar CAD. It kind of looks like it could be the end of a wave B, and if it is the end of a wave B, eventually it's probably going to go up and take out that high. But we do definitely have impulsive up. We're waiting to find out whether it's going to keep making impulsive up or whether it's going to engulf down and start a pullback and then go up again, like either an A or a 1, a B or a 2, and then a 3 or a C. If this really is the end of a wave B here, then it's going to be a 1, 2, 3. It's going to go up and break structure. Unfortunately, we don't really have a break of structure yet, so unfortunately, we're definitely still bullish. It's been very messy. This week has been very sideways. This morning, well, originally, like yesterday, I was saying, oh, it looks like it's going up. But then what happened was it made one, two, three ways down, one, two, three ways up. It looks like it made three ways down, three ways up. It looks like it's either now going to make five ways down for a 3-3-5 pattern, which is kind of like a flat, even though it's really not a flat. Or it's potentially going to make a 3-3-3 pattern, which is an A, B, C like this, which would be a 3-3-3, which is a W, X, Y pattern. Definitely a couple different possibilities, but kind of seems to me like the dollar wants to stay bearish for now, doesn't it? Oh man, that dollar Swiss definitely did turn up pretty strong, but when you have such a strong candle, it's kind of common for it to pull back like that. Definitely no engulfing up on the 2 hour, so I'm definitely going to stay in that trade for now. I think the next 2 hour candle could go down. I'm short the US dollar Swiss, and I did say this trade with my numbers at the exact time of entry. What else do we have for things to request here? The US dollar yen. Yeah, like I said, the yen pairs have definitely made at least a temporarily have at least made a top. Now it might just end up being like a pullback within an uptrend, but if it does go down and break structure, then it's a much bigger, much more significant move to the downside, most likely coming. More than likely, we are in a pullback to this whole move up right here. So more than likely, it's going to make an A, a B, and a C, and then go back up later on. But if it does decide to just keep on making lower lows, lower highs, and go down and break structure, then we are definitely in for a much bigger pullback. But there really is no reason to say that that's actually what it's doing right now. Mm, definitely could have made five waves already. One, two, three, four, five. It might be completed. It might have completed the A. If it did complete the A, then it's probably going to go up and make a B, probably at least back up to this area, and then probably down for a C. So we're probably in a wave B right now, which is probably going to end up being a pullback to this whole move down. Yeah, what's going on with the pound Aussie? I didn't end up sorting it again because the thing messed around with me for a day and a half and ended up doing nothing. I almost went long on the Euro CAD again today, but that thing just wants to mess around. So, and plus on the daily, I do see 5 waves, so it definitely could be starting a move to the downside. And on the really high time phase, one of our good members, one of our members who is good at the Elliott wave counts, Philip, actually thinks it's topped out, which it definitely could be. Let's see, we got a 2 hour candle closing soon. I mean, geez, it does look like a sword, doesn't it? It definitely looks like it wants to make a sword again, doesn't it? Ugh, I know, I'm almost tempted to go sword again. It didn't really hurt me too much last time. It was only a 23 pip loss, and I had like a 70 pip stop loss, so it was like a 1/3 odd loss. Let's see, what do we got for you? The Aussie dollar definitely isn't making a long right now. The euro yen is, all the yen pairs are definitely not making a long right now. They're probably going to make a couple sorts in the coming days. The euro cat is definitely not making a long. Boy, the euro Aussie also. I mean, it does look like the Aussie pairs want to turn down again, doesn't it? The euro Aussie's right at the 50%. Hey, Menu, how's it going? It does kind of look like this could turn down again. And if the euro Aussie turns down, then this is probably going to turn down also. It looks to me like a complete pattern, but it looked like a complete pattern right there too. It looked like a 1, 2, 3, 4, 5. Now in hindsight, I would say, well, maybe that's a 1, 2, 3, 4, 5 right there. 1, 2, 3, 4, 5 right there. A, B, C down. So it definitely does look like a possible complete pattern. Maybe I will take this as a sort, honestly. If it fits, we should take the trade. We shouldn't let emotions, just because we lost 23 pips on it before doesn't mean that the next one couldn't be a big giant winner. I still feel like the day. Oh man, we're right at the 78% on the weekly though, but it's already bounced off this 78% at least 3 times. A rule that I heard a long time ago from somebody was that if it bounces off a support or resistance area 3 times and then it goes on the fourth time, normally the fourth time is when it actually will break. And if this really is a wave three and we really are at a wave four, then it should break this low right here and then potentially go back up again. And then maybe make a much bigger turn, a few months from now. Yeah, it really doesn't look too bad. I probably am going to be tempted into this one, to be honest with you. It looks a lot better than the Yo Aussie. Where's the Yo Pound? Yeah, the Yo Pound looks like it could go up, right? So that means that the Yo is probably going to be stronger than the Pound for the coming, maybe week or two. The Pound was much stronger than the Yo for several weeks, but kind of looks like we might switch roles a little bit, doesn't it? I don't actually trade the Yo Pound, but I do like to look at it sometimes just to figure out which stronger, the Yo or the Pound. Because if you're trying to decide whether to go short on the Pound Aussie or the Euro Aussie, or the Pound CAD or the Euro CAD, then you obviously want a short weakness and you want to go long strength. Man, it looks like it wants to pull back right at the candle close, doesn't it? But that's not a very good sign. We'll see what it looks like in 10 minutes, but I might be tempted into that one. We'll see. Be nice to get a couple good winners this week. I just started trading on Tuesday. Hey, Rocky, how's it going? What's menu saying? Oh, the 5 minute time frame. I actually removed the 5 minute time frame from my charts. I don't even really want the 15 minute time frame on my charts anymore. But kind of my rule this year is that the sort of time frames don't exist to me anymore. I don't mind looking at the sort of time frames from time to time for other people, but for me, the sort of time frames really don't exist anymore. I literally traded for 8 years without the sort of time frames, and I did much better. At least me personally. I did way better trading this when there's I did way better not trading the shorter time frames than I ever did trying to trade the shorter time frames. I watched over the holidays. I don't know where. I don't know. I was a YouTube video. I don't know who made the YouTube video. I didn't save the video or nothing, but there was a guy talking on one of the YouTube videos that I watched over the holidays about how short time frame trading is going to become even more and more difficult in the coming years because all of the big hedge funds and big banks and stuff are going to be using AI technology to do a lot of their trading, and it's basically going to be one AI bot trading against another AI bot, and that's going to make short time frame trading even more difficult than it already is. And short time frame trading is already difficult, in my opinion. So definitely be careful. You definitely, I do agree with you, Menu. The sort of time frames definitely will show you the end of a trend. It will definitely show you the turn quicker. No doubt about it. I definitely agree. Anyways, yeah. Yeah, gold could, like I said, gold could end the wave five, but there's no proof of it yet. And if it does end the wave five, it will at least take out the low of wave four, but there's no proof of it yet. There's no break of structure yet. And this could just be making another flat pattern, to be honest with you. This could just be another ABC flat within an uptrend. So as of right now, it probably is trying to push down, but is that just a wave C within an uptrend? It definitely could be. It could even be a running too. I mean, it could make a higher low like this, and bam, up it goes. Unfortunately, there's no reason to say that the trend is over yet. And besides the fact that we got five waves on the daily, but that doesn't really prove anything to me. The market can make way more than five waves if it wants to. Yeah, I'm gonna stay in that Euro Swiss. Kind of looks like it's doing exactly what it did right there. It's gonna close a 2 hour candle bullish, and then probably push up a little more, and then hopefully down to here, which is my target. Yeah, not too bad really. We do have a little bit of news coming out tomorrow, but it's not really big news. Tomorrow's Thursday. I'm sorry, Friday. What do we got? Yeah, all we have is unemployment claims tomorrow, and then we got GDP for the pound first thing in the morning. But with all, like I said, with all the geopolitics right now, that's the type of stuff that's moving the markets right now. It's what's going on with Iran and what's going on with Greenland and what's going on with Trump and NATO and all the other drama that's going on right now over the world. That's unfortunately the unscheduled news is what's moving the market nowadays. CPI came out this week and it barely even moved the market. So unfortunately, it's unscheduled news that is really moving the market now, which kind of sucks because most of my trading career, the market would only, it would only make turns around, these red level news events, within a few hours of these news events. Now it makes turns at random points because Trump is doing something or something is going on for Russia or whatever, so China, whatever. Anyways, I guess that's about it for now. Like I said, I'm back to doing these live streams every Wednesday at 5 p.m. GMT time. I also do Zoom meetings every single Tuesday and on Friday for my premium members, so definitely check that out. It is only $30 a month. Definitely follow me on my Instagram channels. I am doing a lot of content on Instagram right now that I don't do on YouTube. I just made a couple videos today that are going to be for only Instagram. So definitely check out my Instagram channel, my business Instagram at least. And as always, I hope everybody the best of luck. And as always, thank you for watching and happy trading to everyone.